Good morning and a happy Tuesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: the big rotation, Pfizer's vaccine results, earnings update from McDonald's, Beyond Meat and Softbank. Monday morning, surprise good news on the progress of potential COVID-19 vaccine turned the stock market upside down, with 2020 laggards like energy stocks zooming higher and leaders like Zoom losing power. The overall move was higher for blue chip stocks. The Dow had actually surged 1,300 points at one point, touching an intraday all-time high, just about 70 points shy of 30,000. It ended the day up 3% or 834 points. The Nasdaq slumped in late session, down 1.5% by the close. Many tech stocks whose fortune surged during the pandemic reversed sharply, perhaps best illustrated by the 17% drop for Zoom video communications. The broad market S&P 500 jumped 1.2%, led by ones out of favor sectors, energy and financials. Energy was up 14% and financials were up 8% as a sector. In another reversal from a work from home trade, Manhattan's largest office landlord, SL Green Realty, who was one of the S&P 500 stocks as well, was up 37%. So there is hope that things will get back to normal. European stocks also did well, closed at the highest level since March. WTI rose more than 9%. The dollar was mixed against the G10 peers, while the treasury stumbled along with gold. In fact, the treasury yields on the 10-year was up about 10 basis points to 0.92. Investors backed away from safety trades, so the Japanese yen slid about 1.9% against the dollar. Gold fell by about 5%. That's the biggest one-day percentage fall in 7 years. In fact, the yields on the 10-year bund also rose, advancing to a minus 0.51%. Another important thing to note was the Russell 2000 index, an index of small cap stocks, jumped 3.7%. In fact, earlier the futures had jumped more than 7%, hitting the limit, which basically prevented it from trading for some time. The moment the world has been waiting for is finally within reach. Pfizer and its partner BioNTech said Monday their COVID-19 vaccine candidate is more than 90% effective in preventing infections based on interim data analysis. With effectiveness of first vaccines previously expected to be in the range of about 60 to 70%, the rate of 90% is just extraordinary, according to Anthony Fauci. In a separate development, Novavax candidate got FDA fast track designation as well. While a safety evaluation is going on, the company said no serious issues have been observed in the trial. Pfizer expects to apply for emergency use authorization with US regulators before the end of the month and could have a green light to distribute the vaccine before the year ends. Pfizer shares rocketed 15% higher, though the reaction seems to be more sentiment than reality. Even a blockbuster vaccine wouldn't make a huge difference to such a large company's financials. Still, general optimism is well founded given the vaccine's extraordinary current efficacy rate. While the final rate may decline as trial concludes, there is little doubt that the vaccine will be an effective public health tool. The first batch of the vaccines will likely be reserved for healthcare and other essential workers, the military, the citizens especially vulnerable to the effects of COVID-19. But even achieving that partial immunization will go a long way towards shifting the calculus. In earnings, McDonald's revenue and adjusted EPS topped consensus. Margins surprised meaningfully to the upside. Beyond Meat tanked post-market after revenue missed. It lost money and said it continues to experience a meaningful slowdown. McDonald's said it will be introducing its own line of Fox Meat, starting with a substitute burger. The new McPlant line of products would eventually include plant-based chicken and meat for breakfast sandwiches. The news initially sent Beyond Meat reeling to a 9% dip. Then Beyond Meat said that it had collaborated with McDonald's on the burger, and then it shot up by 9%. But McDonald's declined to comment after Beyond spilled the beans. Another earnings update is the Japanese technology conglomerate reported a net profit of 6.1 billion for the quarter ended September. That's a big turnaround from a 6.4 billion loss a year earlier when Softbank was forced to write down the value of the stake on WeWork. Its Vision Fund unit, including the original fund of nearly 100 billion and the 5 billion successor, booked a 10.5 billion gain in investment last quarter, the best ever since the fund's inception in 2017. Chinese online real estate broker KE Holdings, known as Biki in Chinese, was a standout performer. Softbank has loaded up more on listed options as well. As of September, it owned around 17 billion worth of technology stocks, including 6.3 billion in Amazon and 2.2 billion in Facebook. So how that plays out remains to be seen, but nonetheless, it was a good set of results from Softbank. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.